Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, looking at natural gas on the daily and weekly time frame, and the more I look at these charts, the more you want to be keeping natural gas on watch here for one of the next hot commodity breakouts, and that will occur if $3 becomes support. So we have a bullish MACD cross on the daily, big time continuation to the upside, and we have a clear tightening range with our lower high compared to the $3 resistance test, higher lows, and we now need to see the bulls get above $3 to continue a breakout to the upside. So the weekly time frame, nice bounce off the 100 week, confirming that strength this week, but we can see all these resistance levels in the mid 290s, 294.9, 294.3, and then 299.8. So if we break $3, that's going to be significant technically on the longer term, and let's zoom out and show why. That's too far out. Let's go to the 2-year chart. 2-year weekly chart, we've got, look at all these rejections from $3. Lots of upper wicks rejecting from that point, and we can see if we get above those levels, it was a very quick drop from 440, 450, all the way down to the support down here in the 280s. So if we break this $3 psychological resistance, we're going to be at the highest price we've seen in a year and a half plus, and then we're going to be looking at a gap to fill here, 344. And it shouldn't be too hard to see a 50-cent plus move to the upside after $3 is broken. So the bulls are attempting a trend change, and they certainly have a nice start, breaking the lower high pattern on the weekly, turning things around, but still a very key level to get over. And looking on the 4-hour chart, you can see just how strong the reaction to the last inventory report has been. Very strong higher lows and higher highs. We are close to overbought here on the 4-hour chart. RSI is just under 70. And zooming in on the hourly, we can see we have a bit of a double top. The high was 2923 today, and then we hit 2923 to the penny, formed a bearish reversal doji, confirmed it, and now we're pulling back. And it's not a concerning pullback at this point for the bulls. We would have to pull back and break 2842 and then down 2837 and start taking out these higher lows that are being established in order for the bears to potentially reverse this trend. But again, just keeping this on watch, and as soon as $3 breaks, we know the bulls have won in the short term, and we're going to be looking for some upside heading into this winter season. So keep natural gas on watch, UGAS as well. We know UGAS is subject to time decay, so the weekly chart's going to look different. Bulls still have a lot of work to do there by getting over $50, turning that level into support. So that's why whenever I'm charting, I'm using the commodities and not these leveraged 3x ETFs, because they are subject to time decay, which does throw off those levels, whereas the commodity itself is not. So I appreciate you watching. We'll certainly keep an eye on natural gas. Gold is the hot commodity these days, but natural gas heading into the winter could certainly become a very talked about trading whatever. Have a think. See you later.